Stocks selling off today as investors grow more concerned about a slowing economy. The Dow and S&P 500 turning their worst session of the year so far. And joining us now is Tom Lee from Fundstrat Global Advisors. He's also a CNBC contributor. And Tom, it is great to have you on a day like today where the major averages are not only lower on the day, they're lower on the week. And the Dow, the S&P, and the Nasdaq are now also lower on for the month of February so far. We teased it ahead of this conversation, the fact that you're seeing a contrarian bullish signal here. What is it?
Well, it's a couple things, but I'd say what really stands out to us is that the market has eluded extended periods of weakness because investors are bearish at the highs at a time when there's record cash on the sidelines. So to us, this is a market that is very skeptical of these new highs. That bearishness and concerns about tariffs means there's a wall of worry. So I think this is actually a very positive setup for stocks.
So you're not concerned about some of the data we've gotten? I mean, that University of Michigan consumer sentiment reading this morning in particular seems to have spooked investors, given the fact that it cited broad declines across age, income, wealth groups. You also said that big spike in year-ahead inflation expectations. That was unchanged, but the 5-year expectations moved higher, too. At what point does that start to manifest into something more meaningful in terms of a slowdown here in growth?
Well, these inflation expectation surveys matter to the Fed because they are concerned about whether or not consumers are actually raising their inflation expectations, and that would, in fact, be bad. But we have to keep in mind the UMich surveys do seem to be polluted by political affiliation. When you break down respondents by Democratic responses, they've gone from seeing inflation under 2% before the election to over 5% today. Republican respondents have gone from 4% to basically zero. In fact, if you look at the distribution of responses for those Democratic respondents, almost 7% think inflation is currently at 25%. So I think that there is a lot of pollution in that data, and I think it's probably pretty typical what happens when there is a change in administration, but I hope the Fed is aware of that political dynamic.
So, Tom, if I recall, in Q4 last year, you were warning about market turbulence, and we've been right now at around S&P 6,000. We're at the level where we were a month ago, a month before that, in late November. Should we also expect turbulence at these levels at this point, given that the macro narrative and the political landscape is still unclear?
It certainly seems like it. I mean, I think investors can cite a lot of things top of mind why short term they're expecting the turbulence. You know, we're coming off 2 back-to-back 20% years. We know there's significant uncertainty about tariffs. In our latest client survey, 63% of our clients, and that's over almost 2,000 respondents, said tariffs or deportations is the biggest risk. That's up from 54% last month. But these are not things that have necessarily long-term negative effects. In fact, things like the number of Fed cuts is actually back towards 2. And I think there's a possibility the Fed may actually make cuts sooner. I think one thing the market is being complacent on is thinking the Fed's on hold. But if this turbulence causes hiring to slow, I actually think the Fed could actually be making cuts a lot sooner, which would be positive for stocks.
Okay, so tell me about these granny shots that you've got, you know, part of your investing strategy, some specific stocks, especially since growthy stocks seem to be especially vulnerable on days like today. And if we're going to get more volatility, it sounds like we might get more days like today.
Yeah, that's possible. But investors really want to own stocks that actually have structural advantages. And that's best evidenced by revenue growth, margin expansion, earnings growth, and reasonable prices. So the reason growth stocks will still outperform is that in a period like this, if we have macro uncertainty, they're going to be names with some visibility. It's not pleasant to own a growth stock today, but you know we know the lesson of 2025 is that these pullbacks have not been deep and investors have been buying these dips. So I don't think today is any different. In fact, it's no different than the DeepSeek panic or the tariff day panic or the CPI panic. So, I think this is going to be a buying opportunity.
Tom Lee just spoke publicly and urged Nvidia holders to not panic about the recent news. What news? Well, U.S. President Donald Trump has dropped a bombshell by announcing a 25% tariff on auto imports alongside sanctions for chips and pharmaceuticals. While the details are still unfolding, companies like Apple and, of course, Nvidia find themselves at the epicenter of these economic tremors. But what does this mean exactly for the future of Nvidia and its stock? Does this spell doom for Nvidia? Tom Lee seems to think otherwise. Welcome back, everyone, to Investocracy.
And Tom, there's not a huge dip here. We're talking about declines of 1.5% or less for the major averages at this point. Is that the dip you're talking about, or you think there's more overreaction potentially to come?
Overnight, it was actually, I think when futures opened, it was almost twice the decline. So the small caps were down 4, NASDAQ down over 3. It's good to see sort of markets are catching their breath. It's the second Monday shock, right? Last week was DeepSeek. Right. But I'd say actually it's almost a victory that if we open only down 1.5%, because I think there was quite a lot of panic over the weekend.
Yeah, look, the market to this point has kind of operated on the idea that this is a negotiation that's taking place, that these tariffs, if they are implemented, won't last for long. Is that your thought process as well still?
Yes, I'd say there's decent odds that, let's say we go 3 months out, that the tariffs will be rolled back because concessions were received. And there are also other mechanisms in place to sort of protect markets from the downside. I know people think this is an unlimited risk scenario for stocks, but if the tariffs come into play and other countries go into recession, those central banks will be easing, which will actually improve liquidity. So I'd say that as bad as things look, I do think there's downside protection.
What do you think our central bank will do in reaction to this? Because President Trump, a week and a half ago, or a week ago, weeks go by so quickly, maybe it was 2 weeks ago, said that he would like to see our central bank, along with other central banks, ease rates. Our central bank did not really seem to go along with that based on the numbers and the inflation data that they've seen.
Well, for the Fed, they'll have to tread carefully because in the short term, would be an inflationary impact. Mm-hmm. It may not change inflation expectations, but it's going to be realized inflation. So I do think it makes sense for the Fed to actually tread carefully. But if I was a central banker in a country that got hit with tariffs and they're getting pushed into recession, of course they'd be easing.
I think the market looks at this and thinks, well, President Trump likes a strong stock market. He likes to see those numbers on a daily basis. And maybe there's the sense that he will not get too stringent with things if he thinks that there's a big impact in the market. Do you think that too?
Yes. I mean, I think ultimately the goal of the President Trump is to make the U.S. stronger, both companies and the economy. There may be some short-term pain, and it's hard to tell how much of this is an investment in improving U.S. competitive positioning. I think it is kind of a test of resilience right now, and the fact that we're only down 1.5 percentage points mm-hmm. on pretty major universal tariffs is actually a sign of resilience.
Trump unveiled his plan to impose tariffs up to 25% on auto imports, sending shockwaves through the ranks of automotive and chip giants worldwide. The anticipated start date as early as April 2nd has poised traders and companies alike on the edge of their seats, watching intently for the repercussions. Companies like Nvidia have taken a considerable hit with this announcement, but Tom Lee thinks it is just market overreaction. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Usually the market overreacts. So if this is the first reaction, I would probably guess that the second reaction is pulling back from some of that decline.
Can I just ask you, it's both a sort of a combination market meets policy meets politics moment, which is, there's a sense in the market, I think, that this is some negotiation and something happens quickly. I don't know how quickly, though, we're talking about. And then the second order effect, not a second order, maybe first order effect is Americans like myself who love avocados. And right, when my avocado, I'm not joking. When the avocado costs, so much more than it did before, and not just avocados, but name all this stuff that's going to happen in the supermarket. And I imagine
there are a lot of vegetables and fruits
in the next week, right? Like this is going to happen. And then the question is, what kind of political pressure there's going to actually be on President Trump when the American public starts saying, I'm at the supermarket and this is not working for me? Or do you think that the American public is going to say, I'm willing to accept this pain? I have my Super Bowl party. I'm at my Super Bowl party, but I can't have all this stuff. Is that going to be okay? Because I remember being on TikTok during the Biden administration when people would go on from the supermarket and, say that the world was coming to an end because, eggs cost what they cost. So what say you?
I do think Americans vote with their wallet. So if they're feeling the pain, just like when they feel pain at the pump, it does affect confidence. And I think if people are feeling in their wallet what they have to pay, and, many Americans actually don't have an ability to absorb all these huge costs. So I think you're going to feel the pain.
Do you think the companies absorb the pain? Or do you think, that's the other thing about inflation, which is sort of an interesting thing. There's been these moments where some companies have absorbed the inflation. Some companies have actually done the exact opposite. They have exacerbated the situation because they said, well, look, if everything's going up, we should actually get ahead.
They have to raise their costs.
We got to get ahead of this thing now.
That's right. Greedflation was, I think, a bigger problem before. I think there is a lot more pushback, and it's going to be tougher for companies to pass on prices. But I'd also, take some of the executive order at face value. This isn't really about rewriting all of trade practices as much as it is trying to get Canada and Mexico to talk about the flow of illegal drugs and illicit chemicals, et cetera. So,
well, to be honest, he has to have that. He has to have a crisis at the border because otherwise it is Congress's place to raise tariffs. If it's an emergency situation, then he can declare an executive order. He says Europe is going to be next. What's the emergency that we say is the reason that we're raising tariffs on Europe?
Yeah, and maybe that's when the market will actually push back as well.
It's crucial to note that while he's threatened similar tariffs before, the follow-through has always been the wild card. This time, commentators like Stephen Ezel of the Information Technology and Innovation Foundation highlight that companies like Apple and Nvidia, reliant on Taiwanese semiconductors, are looking at potentially significant impacts. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
We do get Nvidia earnings next week.
No, it's going to be very, very important.
And this tactical trade from Morgan Stanley on TSM today is part of it.
Yeah, and there's 4 different notes today saying don't worry about the quarter. So that I don't like that. We, those who own it, like my Chapel Trust, we don't want any expectations, especially because Blackwell is just now shipping for some companies. That's the latest and greatest. And we do like David. There seemed a secret Atlanta warehouse for Musk, where he bought a lot of GPUs. I don't know if you're aware of the secret Atlanta. Got that one?
No, actually, I had not heard about that. I was only aware of Memphis and
big.
The 200,000 H100s and
the Atlanta data center.
Warehouse.
I'm reading Business Insider has sizable computing power.
Is that for?
It's for X and XAI.
Is that for Tesla?
Yeah, and
it is for XAI. Okay.
And, this is David. 12,000 GPUs they bought, $700 million worth of equipment. Again, another check, presumably for Jensen Huang. Remember when they had that split? That split's over.
While predicting stock futures isn't an exact science, the stir caused by this news sends a persuasive signal to investors. The potential for growth in U.S.-based manufacturing presents an intriguing opportunity, particularly for those willing to back domestic industries poised for expansion. Can Nvidia survive this, however, with its reliance on Taiwan's semiconductor? Only time will tell. But what do you think? Share your thoughts. Finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.